Markets are now expecting possible rate hikes rather than cuts, creating uncertainty around future policy decisions. Treasury yields have risen sharply, reflecting a combination of higher growth expectations, elevated term premia, and notable repricing of monetary policy. Since the onset of the Iran conflict, the U.S. Treasury curve has experienced a meaningful bear flattening, with front-end yields rising more than back-end yields. The 10-year Treasury yield has increased by approximately 60 basis points, while the 2-year yield has risen by 77 basis points. After last Friday's stronger than expected jobs report, markets are now pricing in a roughly 100% probability of a rate hike sometime this year, with a 67% chance of 2 hikes by June of 2027. This marks a sharp reversal from earlier in 2026, when investors were expecting multiple rate cuts. Despite the front-end repricing and near-term inflation risk from energy markets, long-run inflation expectations remain well anchored. This is a critical distinction, as near-term inflation pressures from geopolitical events are being viewed as transitory, while structural price stability expectations remain firm. Analyzing the move in the 10-year yield since the start of the Iran conflict shows that the majority of the increase, approximately 46 basis points, stems from rising growth expectations, with a smaller portion of only about 13 basis points tied to higher inflation expectations. Yields have risen on the back of better than feared growth, not runaway inflation, a distinction that matters for the trajectory of rate volatility going forward. A substantial amount of bad news appears to already be reflected in prices. Absent a resurgence in oil prices or a sharp acceleration in growth, the recent surge in yields is likely behind us. A balanced portfolio approach, mixing stocks, bonds, and other assets, remains important in a changing rate environment. If you have any questions about the stock market, bond market, or your investments, contact us today at Oxroad Capital.